Thanks, Charles. I appreciate that. As you can see, I normally don't have a beard. I started growing this for part of a New Year's resolution. I promise I don't like it, and my wife doesn't like it. I said I'll shave once I hit some fitness goals. But the way things are going, I'm going to be at the NARA convention in October with a bigger belly and a ZZ Top beard. So that is me underneath all this. So I'm thank you to the NARA for asking me to come and present today. It's always a pleasure, always an honor to talk to this group. Chloe Krimmel is our proteins editor. She was the one who's going to give today's presentation. She put this together. I joked, if you've got problems with it, reach out to her. If you like it, please see me in the lobby afterwards. I'm happy to talk more about it. And I'm joking there, but she is a real expert. Her contact information's at the end, and please reach out to her if you have questions about the proteins market. Just quickly, a lot of people don't know Fastmarkets. A lot of people are very familiar with the Jacobson. I've been with the Jacobson since 2007. We were acquired by Fastmarkets in 2021. It's been a really good change for us because Fastmarkets has a very global reach. So where we were primarily focused on the US market with weekly reports on APAC and Europe, some South America, we've really grown into a global price reporting agency. We just hired somebody in Brazil who's reporting on tallow prices for us. We're going to start reporting protein prices out of South America as well. And then we've got global reach to other markets. And just quickly, methodology, people ask us, how do you come up with the prices that you print on a daily basis, weekly basis? We engage with the market, telephone, messenger, any way you can get a hold of a buyer, seller, trader, broker, we're doing that. And we're finding out what's trading on a daily basis, coming up with a price. In the absence of traded volume, we will take bids and offers as long as they're made to the market as a whole. And then in the absence of that, on a rare occasion, we have what we call analyst assessment, where we'll move a market to keep it in line with the rest of the market in the absence of liquidity. So jumping in quickly, I'm just going to talk mostly about protein production, because what feeds the rendered product supply, ultimately, it's demand and growth in the beef, pork, and poultry sectors. I'm not going to go through these numbers in too much detail. There'll be a copy of this presentation available to you afterwards, so you can see those numbers for yourself. But really, just kind of pointing out the trend. We're seeing some of the smaller markets, they're projected to have growth in this next marketing year, 24-25. But the big players in the market, so that's China for pork and that's US for beef, are projected to have slower slaughter numbers, and that's going to weigh on the overall global production of beef and pork. And again, here you can see the numbers up there. Big drop in the US. I'll get into that a little bit down the line, but a lot of that's driven by the cattle cycle. You know, we had strong slaughter over the last few years. I think some people thought we'd see a reduction. This last marketing year, it didn't really kick in. We've had some high feed costs, as you can kind of see from Felipe's chart up here on fat prices. That really impacted margins, and as a result, we saw demand for beef, or demand for harvest, start to slow. China, I'm not a Chinese pork expert. I like to joke, you know, I know mostly about pork and beef through the smoker or on the plate. But I have heard, and we've heard, that a lot of the Chinese reductions are coming as part of an urbanization and an overall economic contraction in China. Something to consider is that if there is slower pork slaughter, slower pork production in China, there's going to be strong demand for imports as they replace some of that lost tonnage. That could have an impact on rendered product output, because some of the material that will go into China for edible consumption isn't what is consumed in the US. So we see variety meats, whole carcasses that can get shipped to China, where some of that animal may have gone into the rendering stream in the US, and that could potentially tighten up some of the supply of porcine proteins in the US. Here's just a quick look at New Zealand. Small market, but important player there in the Asia Pacific region. No real big shifts there, other than we saw a slowdown in slaughter at the end of the year relative to prior years. And you can kind of see pig slaughters jumping around there, but not a major, it's not going to have a major impact on that market. However, Australia, you can see here, and like I said, I've been covering this market since 2007. Chloe joined us in 2021 and has taken over the protein report But it was fascinating to me from fats. I still cover the fats for Australia, New Zealand, to see just absolute torrid demand for beef, like a big time demand for beef coming from China. Australia was harvesting everything they could to meet that demand, and as a result, the cattle herd was absolutely decimated. So there was a very tight slaughter levels at the end of the teens, early 2020s, and that market has really come back to life over the last 4 years, year-on-year increase, and we're expecting more a bigger cattle herd in 2025. So expect 2025 to be over that dark purple line that represents 2024, potentially pushing into the 6 million head. And what that means is plenty of ruminant proteins available for that Asia market, domestically in Australia as well. But that I know I've heard quite a few complaints from the U.S. sellers about having to compete with Australia into Southeast Asia and what that has done to prices over the last couple of years. Here's a little more granular look at U.S. Cattle and hog slaughter. I would say the two important charts to look at are on the bottom there, the bar graphs, and that shows pork production forecast, again, 2025 over 2024. The big one is beef production. And as you can kind of see there, for those of you listening, stronger production in Q1 of 25, but a forecast for lower, and then more pronounced lower cattle slaughter in the second half of 2025. So that should tighten up the supply of ruminant proteins in the U.S. are coming out of the U.S. market and in the U.S. market the second half of the year. We're already starting to see evidence of the herd tightening. There's lower numbers out front from the cattle on feed report. And so this is definitely something that's happening this year compared to the anecdotal reports we got last year, but no actual data to back that up. And then here's a quick look at turkey and broiler slaughter. Again, I'm not going to go into too much detail in these numbers. You can see those for yourself. And again, this will be made available, but expecting growth in both of those sectors this year, not just in the US, but globally. From egg to plate, as you all know, it's a very quick time relative to raising a calf and then turning that into a T-bone or even a ton of ruminant meat and bone meal. It takes a lot longer to do that, and we're seeing strong demand for poultry and for turkey demand, turkey growth. So should be strong feed demand there and plenty of poultry proteins coming out of the rendering facilities this year. This is USDA projections. I take them with a grain of salt, but I think that they're good for illustrative purposes. The reason I say I take them with a grain of salt is you see linear growth in broiler production. Now, there is certainly growing demand for meat consumption in other parts of the world. For those of you who work with the younger crowd, maybe I'm just getting old, but I seem to know a lot more vegetarians now than I did 5 years ago, and especially versus 10 years ago. I don't know that it is a given that broiler production is going to continue to increase linearly like in this projected market or in this USDA projection there on the left. Same with the porcine, the pork production. There's space. The farmers have to make money. My cousin's a pork farmer in Iowa, and I don't think that they've had a good year in a long time. In fact, all of his kids are going into pork associations. They're not actually going into farming because it's been hard for them to make money. So it's not a given that these markets are going to increase year on year. I do agree, however, with the beef. And that, again, it's a longer cycle. It's a little bit easier to project further out in the future. And we are going to see less beef coming out of the U.S. Harvest facilities over the next few years as the U.S. goes through that rebuild cycle in the cattle herd. And then what we focus on more is the rendered product output, so fats and proteins. And here you can see protein production. This is a November year to date, so looking at Jan through November 2018 through 2024. 2024 was lower compared to 2023. But still relatively strong considering the prior years. I think disappearance or had a good guy that I used to talk to, and I think this is kind of the joke in the industry was it's better to sell it than smell it. I think some people have been having a harder time with some of the meat and bone meal selling it versus smelling it. And you see exports are making a big percentage of that. So just because the production has increased, we're not seeing a big change in market dynamics as a result. And then you see year to date 4.6 below 2023 there in January. Here's a little, again, a little more granular look at meal production, meat meal production as projected by the USDA crush report, significantly lower than 2024 or than 2023 in prior years, seeing a decrease in the porcine as well. Something of note, I want to say this because it's important, is that this is the data we have to use. I'm not always sure that the USDA crushing report is right on track either. I don't know if it's a slowdown in reporting, but the cattle slaughter numbers don't necessarily support a big reduction in rendered product output like this. So I think that the numbers, if you shift that line a little bit higher, that's actually more representative of where the market truly is in terms of supply. It's not as tight as the USDA crushings report would suggest. And then get into what I really enjoy is talking about price, market movement. You know, how does price affect behavior? Looking at this top chart, you know, it's meat and bone meal, ruminant, Missouri River versus porcine. And you can see that spread between the two products has really blown out in 2024. And I started reporting this market in 2007. I don't want to say that you could set your watch to the protein ratios, but the rule of thumb I always heard when I came in, and it held relatively true, is that, you know, you're going to see ruminant meat and bone meal trade about 105% of the price of soybean meal. Obviously, there's some seasonal fluctuations, but it has to do with the value of protein within meat and bone meal compared to soybean meal. And then porcine will trade, you know, it'll fluctuate, but it'll trade a little bit on top of that because it has a little bit more protein than ruminant on average. We saw that relationship completely break down with the growth in all veg diets. I apologize if you've heard me tell this story before. This is a true story. Lived in Iowa for a couple of years. My kid took piano lessons. He was very little, but his piano teacher, she's a little kooky. She had chickens running around her house, like chicks. And she said, she's very proud of it. She said, I just got these chicks. I'm going to raise them to grow my own eggs. I said, oh, that's cool. What are you feeding them? She said, lettuce. That's it? She's like, yeah, I've heard vegetarian eggs are better for you. I said, well, you know, if you don't feed them some kind of complete amino acid profile like meat, they're going to eat each other. And she said, oh, I'm really glad you told me that. I had no idea. And so I saw her the next week and she said, I listened to what you said. I bought some tofu for my chickens. But I think that, like, consumer mentality, as misguided as it, I think that we would say it is, really started to mess with these relationships. And then you see here porcine having a bigger premium to ruminant the second or the part of 2024. And I think that is mixed species. And so over the last few years, we've seen a trend too of very product specific interest. I think there's a push to customize a feed to consumer demand, whether that's pet food, and you all know this better than me, if this is feed mills, but the mixed species meat and bone meal has really struggled to see the prices that pure beef does. And that's always been the case, but it's been especially pronounced over the last few years. And I think it has to do with market access. You know, the more boxes you can check, the easier it is to move the product, therefore the higher the price you can get. And that hasn't been the case with mixed species. And so that's a big reason why we've seen that spread blow out. The last half of the year, you see prices turn lower, and that's largely driven by lower soybean meal prices. Blood meal, not quite the roller coaster it has been in the past, but a lot of that big up and down was driven by COVID. Again, it's still an extremely volatile market. But some of that volatility seems to have washed out. Again, anecdotally, I can tell you some sellers have told me, you know, we don't ask for these massive premiums in times of need, because we know if we get $200 more, you know, this week, next week, it's will potentially lose $300 or $400 3 weeks down the line. Now, that doesn't necessarily always hold true, and please don't, grab me out in the hall if you're a seller and beat me up for saying that, but we have heard more of that. And here you can see poultry price trends. Poultry proteins have come under pressure in 2024. Again, a lot of that's tied to soybean meal. We've seen more specific protein demand. Some people looking for chicken meal versus poultry buy meal. But again, I think it's more strong supply and some weakness in the soybean meal market that has driven those prices lower. And competition in the international market as the U.S. protein sellers are increasingly reliant on global market access. Here's a quick look at APAC prices. Again, 2024 under the prior years. You see China, Indonesia, these are all CIF prices. So whether it's US or Australia, New Zealand material going in there, lower prices. And again, I think that has to do with soybean meal. It has to do with strong global supply, and it has to do with increased competition from multiple sellers. We've seen Brazil be a bigger player in the market. And again, very strong production in Australia. Again, Australia price, that's reflective as Australia goes, so will Southeast Asia. They're very reliant on that Southeast Asian market to support their prices. Again, New Zealand, very similar. It's matching the Australian market as you see some weakness in price. Again, tied to soybean meal, tied to strong supply in Australia, and some weakness in those importing markets. And then here, talking about soybean meal, we've seen relative prices. As I was saying, you want to set your watch. It's a mixed metaphor. You're not setting your watch to protein percentages, but you know what I mean. You see ruminant beef and mobile slide in 2024 relative to the prior year, where porcine is a little bit stronger. And again, I think that has to do with the influence of mixed species in the complex and not necessarily a pushback from protein. But that ruminant still, it hasn't recaptured that value over 100%. And porcine just eked over there the last couple of years compared to the prior two. And I think that was largely tied to all veg diets, which coming out of COVID and with food inflation, I think there's more consumer sensitivity and not as much of a push for that. Yeah. Soybean meal production forecast. Again, this is going to be an issue. Actually, I would say this is probably one of the #1 issues in terms of price and market competition. Felipe touched on this, but with the massive growth in renewable fuel production in the US and globally, there's been a move to expand crush capacity in the United States, globally as well. If you look at the soybean market, historically, producers are crushing soybeans for meal. It's really kind of flipped because of the appetite for soybean meal from renewable fuel producers. Now, how this plays out in the next 12 to 18 months is largely going to be a function of policy. The way that 45Z, which is a tax credit Felipe touched on earlier, is set up or suggested, and this is the outgoing Biden administration that put these rules in place, is soybean oil will qualify for a tax credit. Now, biofuel producers used to get $1 per gallon. Now it's all carbon intensity related. And so it's around 60 cents for a lot of rendered animal fats. It's less for soybean oil, but soybean oil is a particularly important ingredient in biofuel production because if there are trade restrictions on things like used cooking oil or yellow grease, which Felipe showed in his prior slide, there's going to be a need for feedstock. I think that the U.S. capacity is around 6 billion gallons. That's off the top of my head for renewable diesel and biodiesel. You take those 6 billion gallons and you do a rough multiplication, that's around 50 to 55 billion pounds of feedstock that's needed to fuel those plants. Well surpasses the rendered fat output. You can't hit those targets. You can't run those plants without soybean oil or massive imports of fats and used cooking oil. And if I'm looking at the current administration, they've got an America First policy. They're definitely going to favor soybean farmers over Chinese used cooking oil exporters. I think politically that's just the reality. That's potentially going to drive this crush expansion to continue, which means a lot of soybean oil means there's a lot of soybean meal out there. And I'd say the same thing is happening in Brazil too. There's a lot of soybean growth in the soybean sector there, potential for more soybean meal coming out of there, strong DDGS supply. So basically there's a lot of proteins coming on the other half of the lipid demand that are not advantageous for rendered product sellers. Here's a quick snapshot of U.S. export regions. This is where most of the U.S. exports went to through November. You can see China, the big importer of meat meal, talking more about the new administration and tariffs. There's potential threats there because it is such an important part of the market for U.S. producers. Actually, Vietnam is the leader there. And then feather meal, you can see Indonesia, Vietnam, mostly Asia, are the big importers of feather meal out of the U.S. So what could affect prices in 2025? Again, I touched on it. I think the big thing is soybean crush, what's driving the crush. Obviously, tariffs and global market access. I was laughing with somebody earlier. There was this report of a plane of deportees going to Colombia. The Colombian president said, we're not going to take them. Trump says, fine, you have 25% tariffs. He says in response, fine, you have 50% tariffs. So where does it end? What actually happens? It certainly makes my job a lot more fun as a market reporter, as an analyst, because there's plenty of things to sift through on a day-to-day and a week-to-week basis. From a trading perspective, it makes it incredibly risky. So I do not envy the marketers, the procurement, your position at all. It's a very, very tough position that you're in. Disease, as always, in these markets is a risk. It's a concern. Chloe kind of listed out some of the major ones over the last few years, but it seems that the regulatory authorities have done a really good job at limiting the spread of this, particularly in North America. And really, that's it. I think soybean crush is the big thing to watch out for. Policy, what happens with biofuels, and overall, market access. That's a very big thing. I think, Felipe, somebody asked a question earlier about carbon credits. I think back to like the vegetarians, the young people, this might not be true globally, but I think from moving forward, like carbon is going to be the stick by which everyone is measured by. And I think rendered products, you talk about the biocircular economy, it's keeping waste out of a landfill. They should be in a very advantageous position to have market access, to continue to trade, and in some ways generate some kind of carbon credits because they are displacing products that aren't, I don't want to say waste-based because there can be a negative connotation there, but certainly they have a better carbon intensity score than some of the competing ingredients. Here's my contact information. Again, a beardless me there in the middle, Chloe there on the left, who is our animal proteins editor. And then Thais is our animal fats and proteins reporter in Brazil. I hope I did falar português. Is that right? Okay. Desculpe, no you say. I think that was... her contact information is there if you have any questions on the Brazilian market or you want to reach out to her. I know she'd love to hear from you. And I'm happy to chat anytime with anybody that may have questions. So yeah, questions, anyone?
Any questions? Got one over there.